Hello everyone. Once again, welcome everyone. I welcome you all. So this is gonna be a top-down analysis for the week. That was closing price for last week. That's what I was trying to get. So we're in daily, which is very unusual. Usually we do it on the monthly, but I come in here on the daily to just explain something because I want to make this video one of the most shortest one I've done for an analysis. I don't have so much energy to stay in here. And these are levels, like it looks a little bit clustered. My chart is, that's why I want to delete it before I even get out of here. This was how it was last week. Yeah, the market was this way, and it hasn't opened. And I told you that, okay, we'll be watching levels, which are this consequent encroachment, which is Friday's week consequent encroachment. That was a level here, this one. And I was telling you, if price closed, I don't want price to close so much above here. It should keep price below, because if price is closing above here, it might mean buy side might be traded to, and it might have a potential deep retracement, which is not what I'm seeing, because I told you I'll be bearish. And there we go. Monday we traded there. You can see Monday closed below there, okay? And Tuesday was a little bit just about that level still. You can see our price was respecting that level, and Wednesday opened this way. So for the candlestick to be very visible, you can see it. So this level is the Friday's week consequent encroachment. I told you about it all, and look how price respected it, and we had no closure above it. That was why price went down, okay? And I also tell you this was buy side. In my video, I did something very differently this week. I did a weekly interweek. That's interweek in between the week, Monday, Tuesday, Wednesday, Thursday. Like on Thursday, I tell you, okay, this is what I'll be expecting on Wednesday. On Tuesday, I tell you this is what I'll be expecting on Wednesday. And Wednesday midnight, I also did a video what I'll be expecting on Thursday, if I'm not making a mistake. So I literally did that. So you would have like, okay, there's some randomness. It's like, okay, I only get on the weekly basis because you will never be satisfied. I understand, but I did it on a daily basis. Like, okay, midnight, I told you, okay, this is what I'll be expecting this coming session. So I was like about midnight, about 12:45. I told you, okay, London session, I'll be expecting this signature and this signature. That was why I had this level on. And I said it in that video. Go and check the video. I can actually add it to the description below, the videos where I did it, about 2 or 3 of them, the interweek analysis. So I told you this London my jaw here. I did this video on Tuesday midnight. So and then Wednesday, London, we went into the buy side. And remember, one important thing I said, I told you this immediately, it's so, like this one of the time I emphasize the most in all my videos. I told you that this is a daily immediate rebalance. It's a bearish immediate rebalance, and it is used. And if it is a real immediate rebalance, it should not get a second repricing. And I told you why. Because a second repricing of immediate rebalance immediately lessens the probability of it being a high probability immediate rebalance to send price to continue the ongoing sell side delivery. And did we get a repricing? Obviously we didn't. I told you. And this was a high. This was Thursday's high. I told you something here. I said buy side liquidity, it'd be better it'd be left intact. I told you I don't want to see this get taken out, but price could be very funny. So I told you if it will get a sweep, like I'm allowing it can do that. But if it will do, this is the only condition, it has to have an immediate rejection down. And obviously it was better it never got a repricing too, and that was it. So I'm deleting this level. I could just leave it there to validate the trend. That's the only one I'll leave. But for this one, this was the London session. Check the video. I did it there. I won't go too much in details. I went into the 4-hour time frame, lower time frame to explain further. Sorry, and I'll take it away. This was Friday's consequent encroachment. I don't think I have a business with that anymore. So I'm taking it away. It's very annoying for my eye. This was okay, yeah. I also did on the same interweek analysis on YouTube. I'll drop the video, by the way. So I told you that was the last one I did before the week ended. This Tuesday's week consequent encroachment, I told you that for there to be a run lower, because it was like, oh, I said to be bearish and price is just not going down. Somebody told I feel, well, I told you I have a 90% probability of 90% accuracy here in calling price levels in a macro level, which means for every 10 analysis, there's a probability that I'll have one which might go wrong. And I don't know how many I've done yet, but I haven't had one all I've been seeing has been always delivering just like the way I said it. You can check it out. All my analysis is in a playlist on my YouTube. The YouTube playlist is, I think, market commentary and top-down analysis. I think that should be the name of the playlist on the YouTube. You can check it. It should be the only one as at now, 2024 and November. And so Tuesday's take consequent encroachment. For there to be a run lower, higher time frame. And when I say higher time frame, I mean the daily and the 4-hour time frame. Higher time frame must close below here. And what happened on Wednesday? Wednesday closed in the Thursday. Thursday closed in there. Wednesday failed to do that. Okay? Thursday did that immediately. And when happened after Thursday, what happened? Look at it. Price went down to a random level. Nope. I told you this level. What I told you. I said this is a monthly discount draw or liquidity. Okay, we did this in that video. So draw liquidity, the DOL here means draw liquidity. So this was where I was looking at for price to draw into eventually. And this line actually here, I did it live how I got this level. It's 75% of a projection swing, and I said I will have a body closure below here for high probability. And well, it might be a little bit confusing for someone starting out all this I'm saying, but if you watch that video, trust me, you'll get a better understanding. That was the top-down analysis that will precede this one on the playlist, so you can just check it out. Okay, I think that was 18th of November, top-down analysis. So that was where I did all this level, and this level you could see here price closed below it, and look how it just went down really aggressively. I'll take the level outside, and there you go, back to the monthly time frame. As I said, I want to make this as fast as possible. So this week, what am I expecting for this new coming week? Okay, we've been calling this lower all along, and I'm watching this week now. What am I expecting? We've been going down low, so like just very easy, sweet sell side delivery, and there's a very high probability we might see a retracement. It's very possible. I'm not saying it will happen, but it's possible because I don't try to over or ham wrestle the undergoing trend, which is we are going down, like we're bearish now, we're offering sell side delivery. I won't try to be the one to be doing a buy side or no. But I'll tell you conditions that can invalidate a sell side delivery. Okay, first of all, now on the monthly time frame, well, this is a low here. The sell side liquidity below this low, the low at 1.2246. That's the candles low here. What's low again? 24461. So 24461, the sell side in there. 61. I think I should have outlined this level. Let me confirm on the lower time frame. 24461. Yeah, I did that. So let me just make this visible on the. It's not even a daily, it's a higher time frame sell side on the liquidity. Let me make it visible on the monthly, so it will save me the problem of trying to make a new level visible. So this is a level in here, the sell side liquidity in there. I told you I called it daily, but this is like a monthly sell side during liquidity. The correction is, well, you understand now as I showed you. So that's why I'm trying to want to draw there, and if possible, this sell side here at 1.22, this particular one here, 1.22997. That's what I'm looking at. Now I'm going to go in the lower time frame to tell you, okay, I'm not just say, okay, price will come in here and I'll go away. No, I'll tell you what I'm seeing. This is macro, but I just want to focus on this one. I'm not sure if this will be happening in November. It's possible. This level, I don't think we'll be getting in here in November, but there are qualities that validate that. What is the quality? Number one quality is that it's a level I don't want to be visible here. Yeah, this level, I don't know if I spoke about it, but I thought if you see a body, well, let me tell you the quality before I jump into that. Now, what's the quality? Look in here, this is an inefficiency. This is a buy side imbalance, sell side inefficiency. This place, this kind of like BC. And here, I told you, this is, so if this gets overlapped, then swing low at 1.20373 becomes a potential draw on liquidity. This is the swing low here. 1.20273. Am I right? Let me see what I wrote inside here. 20373. 20. Why is it 2 here? It's not supposed to be 3. What's the low in here? Okay, there was a misplacement here. It should be 273. So that's the swing low. There you go. That's the swing low that should be getting. So you can see the name there, the monthly swing low. So that's the only caveat that this will be coming. If this gets overlapped, whether it's on the weekly or on the monthly, daily, no, weekly and monthly this time around, then we'll be seeing this sell. But in as much this has not get overlapped, that's this BC. If a candle has not closed this way, like a candle open and close this way over it, like overlaps it downward, if that has not happened, then we'll just keep waiting for that and other kind of signature, so to the weekly time frame, time is fast, man. I'll be taking so much level here, but for the sake of this video, I just want to talk on something so I can delete it real quick. This inefficiency I talked about long time ago, I think October, if I'm not making a mistake. I told you here, this is the last line of defense for the bulls. If this gets overlapped to the downside, the British pound tanks lower. I said that weeks ago, if not more than 4 weeks. Let me just say 4 weeks. Let me not to be exaggerating, and just 4 weeks. And we can see here this week overlap. Like, look how it fell, like instantly. So that was it. This level was not, we've been here when I was calling that level, so it's not random to us. We've been seeing it. Now this level, you can see the first thing there is delete. So this is what I do when I do my analysis. I do my personal analysis before I do this and post it for your analysis, rather. And I at one level I want to delete because the cluttering of the annotations used to annoy my eyes, and it makes me see price less, and it reduces my accuracy in price. So that's why I take them out. Weekly overlap BC, potential inversion variable. Look at the presence of, this was all we discussed during the previous analysis. In the forward time frame, if you go in there, if you want to, I will not do it on this video, you can check that other video I did it. So if you don't want to do it yourself, you can check that video and see how I did it. The video preceding this one, I'll put in the link, the previous week's top down analysis. That's November 18th, for November 18th. So if it gets overlapped on the 4-hour time frame, they were all close candle in there, and I told you those candles should act as resistance to prevent price from going lower. Let me just, for completeness sake. So for completeness sake, this is the 4-hour time frame, and the inefficiency we spoke about, I've made it invisible to the 4-hour time frame. This is so much stress, I just wish I didn't come in here, but I've spoken about it, so let's be in there and make it visible. Okay, so the 4-hour time frame now. So that's the inefficiency, and this is 18th. So it was on Sunday I did that video, if not Saturday. So I told you that these are backs and forth here. This up close here. This, you see this clustering up close candle. That was the candle on the 4-hour time frame. This is 1 hour. I'm regretting coming to this time frame. I should have just, but I'm here already, so let's do it. The same thing here, I can still see it. These are the up close candle I told you. These are the lot of back and forth. I said this should keep price lower. Okay, so back to the weekly time frame so I can do everything. So I just for completeness sake, but to be honest, this is just very, very myopic, and somebody should you really want to check that video if you really want to know what I spoke about in here. I did a detailed explanation. So this is it, and I'll be deleting it like I said. And this inefficiency, that was last week. I didn't want to talk about it to anyone. That was why I said it in there. But I think this week we actually necessitates me to talk about it. But for now, I'll be just watching on something very simple, which is, now look, I told you I already showed you how to draw tail and week's consequent encroachment. I did that on those inter-week analysis, those videos. You can check them on my YouTube channel. I think one was inter-day, one was inter-week. Two of them very short. I think less than 20 minutes for two of them, if I'm not making a mistake. So the week consequent encroachment of previous week, just concluded week. This week consequent which is here, then 1.26676. That's this just concluded week. Previous week's week consequent encroachment. Okay, that's this week we just finished now. How body closes here determines if we'll continue to trade lower or if we'll see a treatment or a complete reversal. What do I mean? Body closures. Okay, if body begins to close on a higher time frame, and when I talk about higher time frame, I mean the weekly, the daily and the 4-hour. That's from a weekly stance. If I outline a weekly level and I say higher time frame, it means daily and 4-hour. If I outline a monthly time frame and I mean higher time frame, it most time means just a weekly and daily. If I outline a 3-month time frame and I say higher time frame, it most time means just the monthly and the weekly. I will not say that again. Rewind it if you want to hear it. I'll just repeat just one of it. Higher time frames level outlined on the weekly time frame. It means the 4-hour and the daily. So what I mean by higher time frame here, that's the previous week's consequent. How body closing here we determine. So now higher time frame body, not 1 minute, 4-hour and daily time frame. Okay, if they begin to close above this level, 1.26676. If they begin to do that kind of signature, then it just lessens the probability. It doesn't mean anything, but it lessens the probability. It means something actually. It just means, okay, be very conservative. Don't over leverage. Don't overdo it. Just wait for it to really show that it's going to go down. Okay. Now this is a CB here. That's a weekly premium CB retracement. So it is very possible. It's very possible for price to want to retrace here. But this is my LLOD. You already know what LLOD is if you've been watching my video. But it could be a new person. LLOD means last line of defense. Okay? This is my last line of defense for HP. HP is sell side, high probability, not the normal laptop, Okay? HP is high probability. I'm typing all these things will be just so long. So this is my last line of defense, LLOD, for high probability HP sell side delivery continuation. So I will say that again. This is my last line of defense for high probability sell side delivery continuation. So for us to see a continuation to sell side, this has to be kept intact in terms of price can come in there, but should not overlap it. Okay, good job. This was previous week's 50% range. I talked about it that price might want to gravitate in here. Okay, this is delete. I'll be deleting it, but before, I'll be referring to it once I reach the European dollar. That's when I'll delete it. I need to refer to it. There's something I really need to pick on the European dollar. Yeah, we'll be doing the European dollar. So this area also should be acting as an inversion fair value gap. I just toss that in a little bit. And if you look, you might be seeing some lines around here. Now, the first line here up here is this day. So this was Monday, 6th May 2004. The tail, the consequent encroachment. I told you I taught you how to draw tail. You can check the video. And so the tail consequent encroachment, you guessed it. Okay, body closures, right? Body closures. If body begins to close below here, then it's a signature like, okay, good. We're going to sell side delivery. We're going to offer sell side delivery. It's probably very high probability. Okay, so if body closes on the hourly time frame, that is the 4-hour, not 60 minutes, 4-hour or the daily time frame begins to close below here, then we might begin to see a continuation for sell side delivery. This is not actually day. This is a weekly tail consequent encroachment. Let me confirm, because it's very important. I know. Okay, it's obviously a weekly high time frame consequent encroachment. So I'll do that changing real quick. People have seen me when I've done this a lot of time. It's very important because I might be trying to get a trade, and once I'm looking at it, I'll be looking at the daily time frame. I'll be looking for this time frame, and I'll be like, what's this level? I can't find it on the daily time frame. So that's the correction right there. Here we have also this level, 3-month consequent encroachment. Okay, let me quickly run to the 3-month time frame and just talk on it while I'll wrap up and go to the British European dollar. 3 month, 3 months. Here we're on the 3-month extend. So this is the 3-month time frame. So the consequent encroachment of this candle still is this level here. And what I say, 3-month take consequent until higher time frame body closes below here, I'll remain a lot more flexible with price. Which means once body begins to close here, that's when I'll be like, okay, I want to be aggressive. But for now, I'll just be a little bit conservative and watching if higher time frame will close below here. And I told you when I'm talking about the 3-month time frame, I mean higher time frame is from the monthly and the weekly. I said that you can rewind the video on the monthly and the weekly. But once it's on the weekly, it means daily and 4 hour. But this level is on the 3 months, so it means on the monthly and the weekly. You can add the daily time frame, but best monthly and weekly. So if a monthly candle or a weekly candle close below, that is if November closes below 1.25319, in simple terms, then I will be more like, okay, yeah, we're going lower. But in as much as that's not happen on November ending or the week close, because I think this coming week should end November. So if this week this week's range closes and overlaps this level, then that's a plus, which means November actually closed below that level. That's that about the level I just told you now. Is the 3-month to consequent encouragement, and here is this low. It's sell side draw and liquidity. So that's the daily sell side draw and liquidity. I think that level is also a very important level on the monthly. So it's very important. I'll not include that. I will take a little bit of time in between and get the video. And obviously, if we see some overzealous price delivery, then this sell side here at 1.2297. Look left in here, 1.2 or right rather 1.22997. That's this low here will be a drawn liquidity. If it is an over, I don't. To me, if you ask me what it, I'll say I don't think so, but it's possible. So I always talk about it. Now, where are we going to retrace to? Where level? So note this level. This is the consequence encroachment. That was where I started this week, and this is this video. Sorry, and this is the CB. So now daily time frame. How we're going to be using this level to know how we're going to engage price. So this is how you can look at the macro time frame. But to zoom in to explain better, I'll do it a very good zoom, and I'll make it this way. So we're focusing on this price factor, and here is that CB I showed you. You can run the video on the weekly time frame. Is a premium CB. So last line of defense I spoke about it, LLOD. That's how I told the meaning. Now look closely. This is what a 2 up close candle with a fair value gap, which is a CB. So this makes this a change in state of delivery. This becomes a potential bearish order block. I'll repeat that. This is 2 up close candle with a fair value gap just at the right of it, and price went lower. It makes this a change in state of delivery and immediately validate this as a potential. I didn't say it must, it's just a potential bearish order block. Now, daily bearish order block open. So pay very great attention here. This is where most of the information you'll be needing for this week will be disseminated. I told you this order block opening price. So this is the main threshold of the order block. I already taught you how to divide levels. You just put a Fibonacci at the low. This will be using the low because the wicks are little, they are not so long. Okay, if they are so long, we'll be using the bodies, but you use the low and the high. The midpoint is this level here, not this one, 1.26484. So that's what we call the daily bearish order block. Minus is bearish, plus is bullish. So the daily bearish order block main threshold. Once it's an order block, a breaker block, a mitigation block, okay, we use the midpoint as a main threshold. But if it's an inefficiency or a weak, we use the midpoint as consequent encouragement. And this is a CB, which is on the separation between this candle's high and this candle's low. You see, it's only sell side offer there, no buy side, no up close candle in there. So here is the bearish order block opening price. Within, essentially, is within this CB, the upper portion, that is the upper quadrant above the consequent encouragement. If you want to know the consequent encouragement of the CB, you just come in here to setting C middle line. You see, that's the midpoint of the CB. The upper quadrant, that's where the order block opening price is, which makes that level a strong level actually. And what I say about the level, a daily premium CB, okay, coupled with other higher time frame arrays, which include what, the bearish order block opening price. And actually on the monthly time frame, there's also a weekly inversion fair value gap. That level I say don't tell anyone about, it's also in this level. Let me just show it to you real quick. Visible on the daily. Let me make it visible on the daily, and you see what I'm talking about now. So you can see it, that level is around this level. So this is the inefficiency right here. So let me get back to where I just left now. Daily premium CB coupled with other higher time frame arrays, which is the bearish order block opening price, the weekly potential bearish inversion fair value gap, and also the bearish order, the main threshold of the bearish order block is not far away from that level. So, like coupled to other arrays, this should actually be enough to keep higher prices. Like for us to see higher price, this is enough to actually have a continuation to sell side delivery. This will be a long-term trend sell side delivery. But if it fails, in the instant that it fails to keep price lower and it gives way, then higher premium retracement will be called for, and not random levels, by the way. Higher premium retracement, which means this high might be getting taken out. I told you this high. What's wrong with okay, here's my crosshairs now. Back to the daily time frame. So premium arrays. So this high that I was saying, I don't want to see it get taken out. Now I'm allowing for that this coming week. It's very possible for price to come in here. But if it touches here, it means this is not more a potential immediate rebalance and we'll be seeing premium retracement. Remember, this was 50% of previous week's range, and I explained how I got it. In fact, even on that video, I drew a specific pair. I think if it's not this one, to be on the European dollar, I drew the 50% of the week's range. So if you want to know how to draw it, you'll see it on that video, and the importance will be shared. It was not visited here, and I'll tell you why. This is not a must, but this is due to a back test, and price actually had to reprice to it on Wednesday. You can see that, and coming in here to the new week Monday, Wednesday only ran about this high. It didn't take out this high. We didn't get a higher premium. So to me, I believe if price actually didn't reprice to this 50% level at 1.27617, that's previous week's range. I'll be deleting that after I reach European dollar to tell you the important. If this did not reprice to it on Wednesday, I think we really would have seen a price one, like a price one that want to reach in there. But this has been repriced to this high was a bearish, this low was a bearish immediate rebalance, and there's no need for us coming in there anymore. That's why we went down. So these are the levels I told you. This should actually be a bearish immediate rebalance also on this level. So now watching this is a daily potential bearish immediate rebalance. No premium inefficiency. What I mean you can always increase the volume, okay? My voice might be low and going up and down, but no premium inefficiency will be retraced to if this acts as an immediate rebalance. In other words, its failure means what? Its failure means higher premium will be retraced to. Just like this, I told you in here on previous weeks that it should not get, if it's a real one, we should not get a second repricing. And did we? We almost, but we didn't. Okay? That means its success means what? High probability sell side delivery. For this now, its failure means what? Its success first means what? High probability sell side delivery, like we really run and fast. I might run and just Monday, Tuesday, Wednesday, and might retrace Thursday and Friday. But if it fails, it means what? Higher premium retracement level. We'll be getting this CB, and to me, I actually want price to come in here. Like I wouldn't want this to be a bearish immediate rebalance, but for completeness sake, increase, because there are weeks that will just open. You might not even see a high. It will just open and just keep going. Like let me see if I have an example of a week that did that. I think there was one. Like look at this week. The high of the week was so little compared to look at the high of this week. Look at the high of this week. Look at this one. Just open and run down. So in instances of such kind of weeks, these are the area I'm looking at. It just might just touch in here. But if it does that, that's even reasonable. But I still prefer to coming into this level. Forward time frame, I'm losing this much to describe or to actually explain. But let's just go in there and oh yeah, now I can talk about something on my what I call it again, inter-week analysis and interday analysis, which I'll be dropping the links on the video description. I spoke about some specific levels, and this was how it was there. This was how price was like. Actually, this way, like this, price was about this level, and I told you I drew this line that looked like a diagonal support. I told you that this is so seductive to price. Price will want to trade into it. I use analogy like when you see a girl sitting right at the corner as a guy 20 years old, like if she shoots your criteria as a girl, you'll be like, okay, look at this girl, you are one of attracted to her if you're single and probably you're looking for a partner or whatever. Some people don't just care about it, but literally normal, we know that in the school, I know they tell you unlike charges what? Repel. Unlike charges attract and like charges repel. So the same way, once you see a boy and a girl, there should be no reason why boys and boys should be in a relationship. I don't care about whatever anybody says, but a boy and a girl is how it should be. So you want to be attracted to your opposite sex. So price is one of attracted to this level. Like this level is like so much of stop losses in here. Price will want to draw into it. And I also use this level, this balance price. Everything was outlined. This was a 4-hour time frame level, I won't talk about it in here. I'll even be deleting it. Check those videos. I'll be dropping the link in the description. If you want to know more, you can go in there and do it. So, and this is still the level I explained at the beginning of this week. So, and you can see how price opened on Wednesday. I did it in midnight of Wednesday, like very late. I did that, and you can see. Sorry, on Wednesday night I did this video, and you can see how Thursday just destroyed this whole level. It really was what attracted it, and look what we had. We just kept going down and down and down and down and down and down. You can see that. So that level also is getting my eye annoyed. I'll be taking it. So now remember the consequence encroachment of that other block I told you here on the higher time frame. Check the level, confirm it. That's the level that is green in here. I want to point it out. This green line. Okay, that's the daily bearish order block 1.26484. You can see that it's intentionally the 24th of June new week opening gap low and high. That is consequent about that level. So that level is a very strong resistant level, like not support and resistance, like it's a strong level that should actually prevent price from going lower. Okay, and we can see the weak consequent encroachment of a 4-hour candle in there also. Okay, it was actually used in here. This high is 1 point. When I say high, low, and close, look at the top left corner. You see OHCL. You can see that OHCL. So open, high, low, and close. The high of that candle is 1.26528, and this level is 1.26 what? 525. So it just went there up a little bit and offered sales at delivery. That was 10 a.m. silver bullet time. That's a silver bullet trade right there. So price has actually come in here. So to me, I don't think price should want to come in here, but giving allowances and for complete stick, I always outline it because price I want to revisit the level twice. I don't like, it's not my decision to make. Okay. So that's it, and this is London buy side liquidity, and you can see it's almost in line with that consequent encroachment. Sorry, potential immediate rebalance on the daily time frame. So the British pound, European dollar is where I'm going to right away. I want to see if there's anything to talk about here. No buy side, no, not so much. I told you draw liquidity is inefficiency, and I told you those lows. So quickly to the European dollar, to the monthly time frame. I'll be so fast in here. The video is almost getting beyond what I want it to be, and here, this is a monthly. I say monthly. Hello. Monthly, yeah, here we go. So this is the monthly time frame. This is a BC, okay, and I told you last week before we opened that what I said something about this level. I say for overzealous sell side delivery, this is the drawn liquidity. This is overzealous drawn on liquidity. DOL is drawn on liquidity. LLOD is last line of defense. HP is high probability. Those are my abbreviations. So DOL is draw. The LLOD and the HP, I coined it myself, but this DOL, I think it's already been existing, whatever you people would have understand it, but draw on liquidity for anybody who does that. So it will be overseen because last week we haven't been here. So this inefficiency is what I want to just show you, and we'll be circling back to the higher time frame. And also keep in mind that this level here was the low. Not here. This level was low of this month, okay, October month, and that level, let me talk about it real quick. That level is actually I said going into 2025 we should see this level get traded to, because then we're up here. I started the analysis since November, so I've been telling you that this is where I want to see going into 2025, and on Friday, which is this concluded week, we actually got it traded to. So that's just to emphasize and tell you, okay, this is what this level meant. Okay, going to the weekly time frame now. Yes, I've seen something I'll be talking about very quickly. This was the level, and this was just this week. We did it in here. Now, pay attention. Before, the reason why I didn't delete that 50% of the previous week's range was because of this. This was 50% of what? Of previous week's range on the European dollar. Where did the high of this candle from? This level was 1.06121. The high of this candle is what? 1.06099. How many difference? Just like 3 pips. Like 3 pips. Look at how I told you this level that price wants to come to 50% of the previous week's range most of the time. You can see how close we came in here. The British pound did not do that, and I told you why. Because it was used on the 4-hour time frame. Look at the previous weeks here, and look at, is it the daily or 4-hour time frame? Yeah, it's a daily. On the daily time frame, right there, I told you that at this level, here on the daily time frame, the price actually had traded it on Wednesday. Now let's go to the European dollar. Remember, it's still the 50% of the previous week's range. Look at in here. Did Wednesday, did you see any candle coming in there? After this candle overlaps it, do you see any candle touching it? No candle came in after the overlapping. Look at the European dollar. Sorry, the British pound. This is the last comparison I'll be doing with them. Yeah. After the overlapping, okay, it was overlapped. This candle came and touched it in here. Okay? But here on the European dollar, after the overlapping, here, no candle was able to do that. And that was why this candle almost did that on Wednesday. And this high was discussed on that video. I told you previous day's high, I wanted to get traded to, it was done. This was still consequent completion of Tuesday. On that same video, I told you before Wednesday open, I told you if there should be a run lower, because actually the British pound was giving the signature, but the European dollar was delaying. So I told you that if there should be a run lower, higher time frame bodies, which is the 4 hour and 3 time frame, should close below here. Okay. So now this week now, what will I be using that? It will be used as essentially the daily bearish order block main threshold. Now, what I used last week, you can check the video if you will. I'll be taking it out. This is what I expect for it this week. Okay. I'll be taking it as a word, as the main threshold of the daily bearish order block, which is the daily order block. These two uploads candle, the same thing on the British pound, the fair value gap, which is change in state of delivery. So like the main threshold, which is you can use the fib from the low to the high. This also literally the weeks. It's not so long a week, so you can use the weeks, not just the body alone. The midpoint is about that level, so I'm watching that level to see how price reacts in there. This is a CB, very little one in here. You can see that. Yeah. Okay. This is also Thursday. I told you this before the week open. In my pre-week analysis, this concluded just 18th November. The pre-week analysis, I told you that Thursday till consequent encouragement, that body closure below here is a plus for sell side delivery. And what happened? Body closing here on Thursday. Okay. What happened on Friday? You can see that. Like you can see that. So this was before this week open. Like when I outlined this level, this was how price was. Where is Sunday? 18th. This was it. This was how price was. And I told you if price closed below this level at 1.05129, that was will have high probability. Monday did not close there, Tuesday did not close in there, Wednesday did not, Thursday did that. Immediately I knew we'll be trading low, and why boom. You can see that? Okay. I'll be taking that level. We've used it. Yeah, I don't want so much. These are drawn liquidity I outlined, during the previous week's analysis. I told you where I want to see price coming to. So this is a sell side liquidity in here. I think this is a monthly. Okay, I talked about it already, and I told you this overzealous price delivery, this inefficiency will get repriced to, and it really went in there. Okay, and if you watch closely, they say as a symbol in here, I could have just ignored it, but somebody might really have seen that. So I'm trying to go back for you to see why I have this kind of line in here, and then make it very visible. Let me try to increase it out lower here, so it's visible now. This down close candle. This another down close candle. So this was the other block, was in here, the fair value gap in here, traded to and went up. So this other block, it was actually used to send price higher the other time. So now, how will I be using this other block? Look at it. Now, this is a daily bullish order block open. I thought the plus is bullish. I will now be using it as an inversion. What do I mean by inversion? I want price to overlap it, which you can see it has done that. Let me just extend it by 1 or 2. Let's see. Okay, by 3 will be better. Price overlaps it. So if it's coming back in here, you should want to act as a what? As an inversion. Price might still go in up here, but interweek, when you're intraday trading, you might use this as an entry or exit level. Okay, the level is too bold. It's good, but I just don't like too much of ambiguity in my chart. So this is that for the European dollar. Now you can see that level. So now I can delete that on the British pound. I told you that the only reason I didn't delete it was because I want to show you the importance of that level on the European dollar and why we didn't have to get to that level on the British pound. So European dollar that was almost that, like, you should, clap for that. That was so close to price. I outlined it before the market even opened, just like I'm doing here. So if it happens next week and it does again, yeah, I really did it in this video. And if it goes against absolutely, I haven't been wrong. So, if I even get wrong today, I really don't care, but I'm just telling you, this is what, there's no how you will be making a mistake in here. The only reason is if price just open and just start running lower, you're like, oh, psh. But if price is coming in here, you are looking at this level. How is it working? Is it working as how the selling price trader told me? Is it doing that? Is it getting disrespected? Is it getting respected? Are we coming in here? So that was it. So this is my here. It's like a very strong defense level. It's like my last line of defense for now. And this level on the weekly time frame, I just have some things. I'm just rushing, but let me try to be calm now. Okay. This inefficiency is obstructing my eye. Weekly IFVG. Let's just take it out for a moment. So you can see this level, this CB, the separation between this candle low and this candle high. This level, I want it not to get traded to by price. It's a premium CB, so I want it to act as a big gap. A big gap means a breakaway gap. This should not get repriced to for high probability sell side delivery. It can, but for high probability sell side delivery, it should not get repriced to. Okay, that's why I'm watching that. So I can just return back the level I deleted. And this is a CB in here. Okay, this is actually a larger CB on a weekly time frame. It should be incorporated. This is what is this still a daily CB? Okay, daily CB. Let me make this be on daily alone. That's the level. If I am the other block fill on daily, it will come in there. But this is a CB, so what note taking, because price might want to come in here. So I'll be drawing that. I think that skipped me during my analysis. I should just have outfit outline like I had it on the British pound. but this is just the level. So once I have the level, I did try my best to make sure it's very precise. So I look at the high is what 099, the low is what 826. So I just go in there, coordinate, I put what 826 and 099, and that's what that becomes a weekly premium CB. So weekly premium, not precision, premium CB, that's sell side imbalance, buy side inefficiency. So we'll be looking at how that level looks. I told you, remember, this is like a breakaway gap. Let me increase the hue so you can see it very well, like that white line. Let me just make it even this way so it will be so obvious, conspicuous. You can see it there, that level, this white arena here. I don't want price to come in there for high probability sell side delivery. And if price even gets in there, that red line is the level that, okay, if price is overlapping that level, then everything, other flow might be shifting. But for now, just make your attention be in here, okay? If this level gets violated, then you can be thinking of those levels and watching there. You might be switching to buy side delivery, or if you're having no much experience, you just sit still and wait for more information. This is the level. It's so annoying here. That's one. So, but you know what it is? The weekly inefficiency. So price I want to reprice into it. This high is what 009. So that was the high. When is the high actually from that inefficiency? So just please let's leave it on the weekly. Let's see. I don't want it to be in delay. It's annoying. So this is the level for daily. If this all this level fails, this other block, this 50% buy side, everything, if everything fail, then this level should actually be the one to hold price level. So I told you if everything fail, then if the whole other block fails, okay, I don't think I've said about it, but if the whole other block fails, then this should defend higher, like it should defend, it should resist higher price retracement, not defend now. It should resist or prevent. So let's just say resist. It should resist higher price retracement. Its failure lessens high probability sales, which is if this level gets overlapped by the upside and it fails to send price lower, then we'll be going higher. I told you I don't want this inefficiency to get repriced. Like I told you on the British pound, that immediate rebalance was it should not get repriced to for a high probability sales delivery, and we didn't get a reprice, and we saw the high probability sales delivery. So also for this level, this white inefficiency should not come in for a high probability, but it also tells that if it gets in there, it doesn't mean it won't go down, it just reduces the probability. Okay, we're getting tired in here. There's a little bit of inefficiency. That's the sweet spot. I'll talk about that in the 4 hour time frame. But real quick, okay, should I just do that? Let me just do that in there quickly on the 4 hour time frame. Right here on the 4 hour time frame, okay? You can see that this level, this was a large CB. This is the same daily level I just showed you just now that I'll talk about. So it's a very sweet spot for a premium retracement. Why? Price went in here, about 1 a.m., right? Come in here, right? As price came in here, it didn't completely overlap this whole CB. Now we take a Fibonacci. Don't want to do this, but let's just quickly from this candle's low, you pull it in here to this candle high. You can see that price didn't even get 50% and it fails. So this level, this week consequent approachment, you should want to keep body closure. But if price takes it high, then this is a sweet spot. This 50 consequent approachment of this CB, which is also essentially the daily CB. That's the separation between two candles on the daily time frame. The low and the high of two candles, which is what the low of this candle, the high of candle is a separation only sell side, no up close candle in there. That's a CB. So that's a sweet spot on the 4 hour time frame. Price might want to run in like that's very nice for price to come in. So those are the levels I'm watching. I told you this is the other block. I think I discussed about that. If I didn't, it's on the daily time frame. Look at it, 1.015295. The opening price of these two coins. I discussed about that. I even told you how when we should use the week and not the bodies during the other block, and when we should use the bodies. When we have a long week, I just don't like using the week. Unless if the body is so insignificant, very small, then I might use the week instead of the bodies. But when we have little weeks, like in this case, I use the weeks and just draw it and find my main threshold, opening price, whatever I'm looking for. So, getting stressed out. What level is this? Oh, this is when I'm doing my trading. So the level is beyond the scope of this discussion. Okay, don't worry about that. It's not important. It's important then, but even now I don't think it's so. These levels we went through are calling last week, all this 50% level, or we just didn't reach here. There's not so much talk about here. This buy side was taken out, and I'll be deleting it because I told it to be taken out and it was done on the video. I'll be dropping the description in the link. I think you'll be having like 3 videos, the pre-week analysis and the 2 videos which I did in the week to tell you where price will be going to Thursday, going into Friday, Like I did that in midnight. I said, okay, let's say this is midnight now and we're in Tuesday, for example. Now I'm doing a video and telling you, okay, this is what I want to see on Thursday in the London session going into the AM and PM session. That was what I did in those 2 videos. So it's something I want to discuss on the lower time frame, and I'll be wrapping up the video after doing that. So from the 50-minute, 60-minute time frame, I like the way it really shows, very nice, okay? This is London session buy side. Remember, this is the sweet spot we spoke about. Sweet spot. That's it for premium retracement. And this is London session buy side liquidity. Here, this high at 1.0498082. 1.04982. That's the price laid by India. So this was a high, this was a low. London just opened on Friday. Like Friday went in high, and just in London everything was done. From 4 a.m. shit. Like price just shit in the bed. It was not good at all. It wasn't good for trading here. But I was looking, this support and resistance. No, this was buy side. This is buy side. So I was waiting. Will it be taken as a shift in market structure? The SMS was meaning shift in market structure, not just short message service. Okay, shift in market structure or total. So that with price take this and displays, or will it just pipe it up and run down for a manipulation? I was watching that at 8:30 on Friday. This was sell side, London sell side liquidity. I was watching that also, and the price just didn't did any of it. Just sit in the middle. On 15 minutes time frame, it's more obvious in here. So this week I'm watching very closely. I was looking at this throughout from AM session, nothing. Price was just wasting, and like it was really avenging on people that have made money. If you're just pushing yourself, you just lose everything. I just didn't, it's just not a good environment to trade. So now buy side or sell side, I don't know which one gets taken out first, I don't care. But this level are very important. So if price takes one out, I think that will be the Judas, then the next one will be the draw. So if Sunday open and take this out, it might come in here. But I will not like if Sunday open actually went in up. I would like Sunday to actually go in here, going into Monday to form the high of the week. Then Tuesday might run up Monday's high, then we'll sell side leave it to draw in here. But Sunday can just actually open and take this low out and still go in up here Monday. Then Tuesday might form in the high. Wednesday can also form in the high and just go in low. Even Thursday can form the high. Any day it doesn't really matter. But it's just for you to understand how price. But these two levels I'm watching, whichever gets taken out first, then it will mean if this price gets taken out, the reaction is it a shift in market structure? Does it get taken out like this kind of down close candle? Do we see something like that upside aggressively? That's a shift in market structure. Or does it just get like a weak peep, like it just popped through? Like look at this week in here, it just went high in here. It's like a total soap, right? It just went up in there and this retraced, okay? But this type of down close large candle. So if you see that kind of, did I have an example in here? I just quickly give an example. There might be somewhere I just might not be able to see it right now. I just want to make the video so that okay, good. It's just also what I'm seeing. This sell side liquidity was taken here and price displayed. So this was just like invert. I'm looking for something I could really explain and relate in terms of what I'm talking about. I just didn't find. If I go on lower time here now, I'll find, but I don't want to do that stress in here. What I just mean is this is it. Let me just do it in simple terms. If price come in, let me say it well. So someone will say, what is he talking about? It can take this low out and keep falling lower, or it can take this low out as a total soup and displace immediately and come to this high. Now if you take this high as a total soup, like just like it did here and displace, then we might just be going lower, and Sunday might still want to try to come up or opposite side. But if we take this high out aggressively, like we just very like price angrily took it out and closed on body just way, price might just retreat into small level here. Thursday, Monday might go in here, Tuesday might form in the high of the week about here. Then before we might think of anything coming down in here, okay? So that's just what I'm looking. This is not like I'm drawing a pattern or something, just me just explaining what I want to see. So this doesn't mean anything. You don't think it's a pattern, it's just nothing. Just explanation of what I think. So this level, I've been watching that throughout Friday, just was doing nothing. And this level, important level, I'm going to talk about in this video. The dollar index, I told you where to buy. This one will be done in 2 minutes, okay? And I really mean 2 minutes, or less than that. This high, I told you we'll be drawing into it this week. And look at that, this week open, we'll draw into it. I was looking at this actually like, will this be a what? A bearish, bullish inversion, sorry? Would this be a bullish immediate rebalance? And price just didn't even come as low as that. Instead, the kind of immediate rebalance reaction was outlined on this high. Someone say, oh, okay, this is resistance turn to support. No, let's go in there real quick. 106,130. That was this high. That make it red, so it will be obvious. That red spot, okay. Let's go to the lower time frame. You see that red spot, okay? No, it's not support and resistance. I'll tell you what happened there. What do you see in there? This is an inefficiency. This is a busy. The low of that inefficiency, did it get taken out? No. Let's zoom in closer. 2 minutes more. Must be out of here, out of this pair. So the low was not taken out. This is volume imbalance, so that even widened the scope of the inefficiency. But the main thing was the low of this inefficiency was not taken out. It was, look at body closed in here and went up in there. Now more information on the 4-hour time frame. Watch that red line. Oh, it's not visible here. Let me make it visible. I can see it in here without the red line, but for someone, you just, I understand you might need the red line, and I'll make it available in there on the 4-hour time frame. And we'll go back to the 4-hour time frame now. You see the red line right there, 106,130. What do you notice in here? Look at this down close candle. Do you see that? Within that daily BC, look how price was respecting about the opening price. That was it, inefficiency. Price came into that inefficiency on the daily time frame, and it was having a what? That inefficiency and was having a bullish order block on the 4-hour time frame. So the inefficiency on the daily time frame, which is what you can see as a BC in there. You can see the volume balance very obvious. Let me just even make it very obvious. So this is the volume balance. Oops, 2 minutes. So I'm going to the dollar index. Okay, the Nasdaq and E-mini. What am I looking for this coming week? Let's look at the monthly time frame. I'll just toss it in here. It doesn't have to do it. Okay, this is 3 more. This is a CB. I told you about this last week, that so I left that time frame and just less than 2 minutes, and here, but this I should be out by now, so please just bear with me. I just want to get out, but for the sake of understanding and completeness sake, let me do the real complete video. So monthly premium CB and overlapping of its cost encroachment is a plus for buy side delivery. So the midpoint price has not yet closed above that. Okay, you can see that. Let's look at the weekly time frame. Is this level visible on the weekly time frame? Yes. Did the price close above that? The midpoint? No, price hasn't. The midpoint is where you see it one. It didn't. So I'll be waiting for that to be knowing, okay, price will be going up. But right here, there's an inefficiency forming here. Just like in the Forex pair I just told you on British pound on the dollar and the European dollar, price don't want to draw into this inefficiency. Same idea here, okay? To the Nasdaq. Sorry if I extended 2 minutes. I know. That should be beneficial to someone. So I should be rounding up in here. Then now she's getting tense. This is an inversion. I told you here, I'll just be very quick. I told you I went to the regular trading hours. I think on the same inter-week analysis. That video is very rich. It's short, but it's rich with a lot of content. So this level in here, it's an opening range gap. Like this is a real liquidity void that was there. There was overlapping of a new week opening gap lower and a new week opening gap lower twice, and that level had no single print of price. Sweet spot, new day opening gap, liquidity void. How do we get it? Long press here. You see the session, go to the regular trading hours right there. How do you do that again? You just long press here. You can see, you see November, all this level you see November, December. Just long press there. You see what sessions, not session breaks, sessions. Then change to the regular trading hours. You see the gaps. So you can see in here, we'll have a what? This is a new day opening gap. This was Thursday, Friday, new day opening gap lower. Okay. This was what? This was Wednesday, Thursday, gap higher. Between these two levels, right in here, there was buy side delivery inside here. Here, there was just nothing in here. So buy side delivery stopped in here. Between the separation of here and this, where this sell side delivery ended, there was no price printing in here. Look at that. No price printed in here. Buy side cover. This was the actually real inefficiency. This will make my video long now. Huh? This was the real inefficiency from here. The green gap here. But buy side actually was offered from here. So this was the real gap. Let me just make it. So buy side was offered to this level. But there's a little level there, so that's like a sweet spot. Price will want to gravitate to that level. It's void of liquidity, not even buy side or like nothing is in there on the regular trading hours. If you go to the electronic trading hours, you actually see some levels that were outlined there on the electronic trading hours. Well, I gotta get out of here. The noise is 10. So that's the level. So I outlined on that video that I want to see price draw into it. So back to the electronic trading hours, you can see normal time frames and normal chart. So price was very low in here on Tuesday. I told you want to see, and price have been wanting to draw to that level, but we haven't gotten there yet. But it's still very valid. So that's why I'm seeing the index futures to be going into this week, just a very short time. Like if you want to go in there very quickly, you might even gap into there as possible. But if we'll be seeing a sustained price run, buy side liquidity is here 21,340.75. That's 3 ticks. That's buy side. But to me, I see a sell side very suspicious. Like this low, I didn't know why they didn't take it out. Price came in there so much in here. Like look at it in here. I've been watching this low. Price just didn't do that. I've been watching throughout the week. So price might still want to come in here. It's very possible before we see this buy side. If price take this as a total soup, then we might see buy side. But if it takes as a shift to market structure and overlaps this new week opening gap of the 18th November new week opening gap. This is new week, not new day now. New week opening gap. If price overlaps that, then that's very, influential. I might just be seeing down. And how did I get the new week opening gap? The same thing, regular trading hours. The separation between the opening or closing on Friday and the opening on Monday. This was Friday closing in here, and this was Monday opening here. That was the new week opening gap. Done. ES. Ask your questions, please, and feel free to subscribe. If you gain some insight. This has actually overlapped its own new day opening gap. And this guy is even stronger, it's wanting to go up. So just normally to the electronic trading hours, what am I thinking? The same approach for both of them. They usually move in 10 down, buy side liquidity for this one is 60,000 and 60,053.25. That's 60,053 and 1 tick. And I'm watching if price will want to gravitate in there. This inefficiency I spoke about, yeah. my top down analysis for the previous week. So someone might watch and be like, oh, you said this inefficiency, and yeah, this is it. You can see how price reacting to it. I told you I want to see how it should support price if we'll be going higher. I didn't say much because I was rushing just like I'm doing here again to make the video short. And you can see how price retreating to it Monday, Tuesday. We just this was very difficult for just if you're not very apt, like if you're not very unique and you have a lot of experience, you just might ruin your account with this kind of high resistance liquidity one. But we can see how the inefficiency. Do you see any closure below the consequent encroachment? No. Now this is an indication of strength. So I really think this high here. Remember, check the left top corner. OH LCL 60,000. That's 60,000. Sorry, 6,053.25. That's the buy side liquidity in here. So buy side liquidity. Do I even need to write that? Buy side liquidity. That's it there. So 60,053.25 because of this trend plus this inversion favor lookup. Look at this CB. Just please pardon me, okay? The video should be ended, but if you enjoy it, give a thumbs up. Let me know if I should be doing longer or just just let me know your thought. That's an inversion. Like I'm looking at that as, okay, it's a CB. Is it getting disrespected or respected? Will it be overthrown? Like will it be taken up? Like you can see price closing there. What's the low in here? The low is 5,901.75. The high in here is, okay, the closing is what I need. The closing here is 5,991. Wow. The low is in here is what? 5,901.75. This was a little bit higher, but by 7 ticks. So I'm still watching. Let me see the higher time frame on the 4 hour. Does it close below above that? If the 4 hour gives a closure above that, then really we just might want to go up in here. Do we see any closure? 4,000? No, nothing like that. Let's see on the 1 hour time frame. I won't go below that. Closing price? Nope. Nothing has closed above this high. I've not seen a closing. I know if I go to 50 time frame, I might really see. We can see now still. So just respecting this high, just respecting the high. You can see that level, support and resistance, right? Nope, that's not it. But we're yet to see a real closure above the high. So I'll be waiting for that as a plus, a signature for me to want to know, okay, if we really want to be reaching for buy side at that 60,053.25. So that's that for the video. You can comment your question, let me know whatever you want me to improve on and all those kind of things, okay? So I think I should be calling the video into an end. The sell side liquidity I'm still watching for here, it might want to do that, but the tails I'm watching, if body does not close below the tail, then this new opening gap will stay intact and we should want to see price go. You can even draw in here, but if it does, this new opening gap is like my last line of defense. If it fails, then this BC, if it fails, you can see unlike the ES, this actually closed below the cost encroachment of this inefficiency, okay? It's the same inefficiency there on ES, even S&P 500. The same inefficiency. You can see that here, body closed above the 50%. The 50% is this dotted line. You see, like the midpoint. If you divide this inefficiency by 2, you can just go on the settings. You see in here, checking the settings style, the middle line. I just took it off, and I'll show it again. The midpoint is that white dotted line. You can see it. Now let's go on the Nasdaq. The white dotted line, you can see in here, price closed below it. That's heaviness, and showing that this is the sixth sister, and we want to catch up with what ES is in. But I'm watching this CB, just like I'm watching that higher CB. ES is already in here. ES is already in there. Let's look at ES. You see it's already in there. That's CB of Thursday, 14th November. But look at Nasdaq. We're far from it, 14th November. We're still far from it. We're still battling with this one. Okay. So if it's overlapped this one, then we might really want to see this one get into the buy side my report. But I think ES for now is the is the stronger one. It's just okay. It has done this. Nasdaq is still really battling with this current inefficiency on Friday. ES has dusted it and challenging this already. So this Friday inefficiency, look at it on Nasdaq. It's still trying to fight to overlap it to the upside, but the main point of that inefficiency has it been treated through. That's how you measure, okay, if it overlaps the consequent encroachment, then it's possible we might see some strength in there, because on ES the consequent encroachment of that BC was not overlapped. That was why you saw our price went up here. So in here the consequent encroachment was overlapped the midpoint, price closed above there. You can see, so we might really want to see a full closure of the inefficiency and a potential draw on liquidity. This is what I mean on the ES. I told you the BC was not overlapped to the downside at the consequent encroachment. This BC, you can see that was okay. Now if it fails to do that, means it's a strong one and it wants to send price higher. Now this one's, now you use the same idea of this ES. Now look at this, in the midpoint in here was not overlapped, then it went in here. If it overlapped, that means we might want to go lower. Now the Nasdaq futures, the consequent encroachment, which I use that Fibonacci to draw, which I just took out, it has been overlapped. Okay, you can just easily draw with a rectangle, pick up your rectangle and just put it in here. This CB, this low to this candle's high, draw it in there. Look at the midpoint. Consequent encroachment, we just go in there, go into settings, go into your style, middle line. That's it. Overlapped. Strength. Okay. So that's it. Have a great trading week ahead. Give me a thumbs up, drop your questions, feel free to communicate your thoughts. I hope this helps a lot. Thank you all.